is up, guys? Welcome back to the E-Money channel. Understand that this whole game is speculation. What is up, guys? Welcome back to another video on the E-Money channel. Today we're going to be talking about trading, day trading specifically, and basically the pros and cons of what goes on in this market. Also, we're going to talk about the YouTubers and everything, like whether the information that they're providing is actually useful. But first things first, when it comes to trading, you need to have a plan. Most people, they come in and they're gambling basically because they're operating off of hopes and dreams about what they think a company should do, or even operating just off of like news of what a company is going to do and expecting the stock price to follow that intuition. So a little thing about how the stock market moves, it moves in anticipation of like further events. So basically, just because Tesla stock is currently at, like, say, for example, $120, that doesn't mean that Tesla is currently valued at $120. Like, Tesla could have been doing things for the last year to grow, expand, and nurture the environment of the company. They could be selling more cars, making bigger profits, and the stock price is just flat, like hasn't moved in months. So it's basically, understand that this whole game is speculation, and you have to take what the market gives you. The next thing I want to talk about is mentorships. I think it is incredibly important if you're trying to, it all depends on what you're trying to do and how fast you're trying to do it. But I think it's important that you do invest in a mentorship. So the program I went to is called Freedom Team Trading. Jordan F., if you search it on YouTube, I'm pretty sure you can find it. Bought his course, went through it. There was a lot of things that I understood already. Like, there's simple things that you can search on YouTube, like supply and demand, trends, institutional levels. Like, these things you can find on YouTube, but it doesn't give you a complete trading plan, if that makes sense. Like, it's just bits and pieces of information in different videos. So I definitely recommend, if you're trying to become a profitable trader in like a year, 2 years, then you need a mentorship. It's very hard to just watch a bunch of random YouTube videos and then be profitable by the end of that time. And another thing with trading is, like, you learn by losing money. In other jobs or other industries, like, there is like consequences, but it's not monetary consequences to not knowing and to learning. You're still learning in like a risk-free environment. Trading's not like that. You learn by losing that money. And if you don't decide that, hey, something's wrong, I need to change something, I need to figure out what's working and not working, if you don't do that individual reflection, then you're not going to be profitable. Another thing I want to talk about is psychology. Psychology and trading go hand in hand. It lets you know yourself. For example, today I was trading MES. It's sitting around all-time highs. So going into this, I knew I wanted to play off the all-time highs. I also knew that in the past, when we came up to this area, the price of the future just like it shot down. So I had this in the back of my head. I'm like, this time I think we're actually going to break out. I got a good entry and everything. But as soon as we got up to that all-time high, I don't say it's necessarily like a bad emotion, but I'm like, I'm starting to get antsy about being in this trade because it's approaching that level. And I know my take profit is around that level and I might not hit it. So I'm like, I'm just going to cut the trade and be done for today, right here, right now, while I'm still in profit. Yeah, I can keep going. Yeah, I could have made way more money today. Like, it ended up ripping way past the all-time high. But at the end of the day, I know myself. I'm like, I would have been very upset if I wouldn't have closed that trade and it flipped in the other direction and it didn't go my way. So emotions is a big part of trading. You need to understand yourself and also have strong risk management. And breaking this down in simple terms for you guys, say you have $100,000 and you're trading with 1% of that account every day. So you're trading with $1,000 every day. With that $1,000, I know based off of my strategy, at minimum, if I'm trading a 1 to 1.5 risk reward, which means I'm risking $1,000 to make $1,500, that's like the bare minimum I can do usually on a given day, like if we're averaging things out. So I could take that $1,000, make another 1,500 on top of it. That's a good day. That's a really good day. But not everybody has the same risk management. So what people will try to do is they see these YouTubers online and they're like, I turned $100 into $10,000, or I turned $10,000 into $1,000,000. Like, none of this is realistic, because if you break it down, there's no way you can properly do risk management and have a consistent strategy. Like, yeah, you can get lucky. There's people who do challenges and stuff like that. And those are mainly the thumbnails that you're seeing. It's those challenge accounts. They have hundreds of thousands and millions of dollars set somewhere, and they're just taking $100 of it to say, hey, if I lose this whole account, it is what it is. I want to break this down in terms of what I trade. It's called MES. Each contract is worth $50. So in order to get into the trade, you need to have at least $50 in your account. This is future traders, don't get mad at me. This is just dumbing it down a little bit. There's obviously liquidations and things that could occur if you get, like, if your profit gets too low, like if you become negative and you only have $50 in your account. But basically, moral of the story is, say you put $100 into a trading account and you have to risk $50 to trade the stock to begin with. You're risking 50% of your account. You lose twice, and well, realistically, you lose once, you're done. You lose twice, if we're doing 50-50, dumbing it down. You lose twice, your account's wiped, you're done. That's $100 gone. Now, take the person with more capital, for example. They have 100,000 or 10,000. Let's go with 100,000, and they're risking that 1%. They have to lose 100 times to clear out that whole account. I'm gonna break it down to you guys like this. I don't lose 100 times in a row. My risk, my P&L, like my risk to reward and win rate and all that good stuff, it's around 75% for the year to date so far. So that means that 75% of the trades I take are winning trades. So that means I can lose 25 times in a row, but after that 25th time, I'm guaranteed to make money. And this helps a lot because, one, I don't have to keep funding the account, if that makes sense. Like, you lose that $100, then you got to keep funding the account. You're like, oh, I blew another account. I blew another account. It's discouraging. Even with $1,000, people are like, okay, I'm going to risk 100 on this trade. Don't do that. That's 10%. You need to wait to, one, you, like, first of all, paper trade, because if you have $1,000, I mean, yeah, it can be done if you do risk management properly. You're trading stocks where you can bet like $10 a trade, or even 5%. So you can bet like $50 a trade. It can be done, but it's way harder from a percentage standpoint to be like, hey, I'm going to turn $10 into $10,000, $100 into $1,000,000. Like, all these thumbnails that you see, they're just not realistic. So that's another thing that I wanted to talk about when it comes to these trading gurus. It's very important that you vet where you're getting your information from. When you see things like that, it's kind of a red flag, because they're just trying to sell you a course at that point. They were like, oh, this is how I did this. They give you some basic information. It may be valuable information, but it's not an actionable plan for you to go like into the markets the next day and be like, I'm trading this. I know exactly what I'm doing. And nobody knows where the market is going to go. I'm just telling you that, like, from firsthand experience. Even the people who've been doing this for 20, 30 years on Wall Street, they don't know what the market's going to do the next day. They're just taking it as they're given to it, or given it. But yeah, like, having a strategy, having a mentor helps a lot. And risk management is a big thing, because even if you lose 50% of your trades and you win 50% of your trades, if you have the right risk management, like say you only take 1 to 1.5 R trades, or risk to reward trades, when you risk that $100, you make $150. When you risk that $100 and you lose, you only lose $100. You'll still be profitable. That's the crazy thing. The risk management and the psychology of trading are the two most important things I think any trader needs to understand. We can also talk about the pros of trading. So yes, you can work remotely. It takes a little bit of time to learn. You can fast track it 1-2 years. I've seen people do it, but I've also seen people who are stubborn and they're like, oh, I don't want to pay anybody to learn. Like, you pay to go to college and invest in education to get the job you want. So if trading is the job you want, why not invest in the education? Like, it's the same concept, literally the same thing. So yeah, like the mentorships, like I said, big thing. I appreciate you guys watching. Make sure you guys like, subscribe, turn on those post notifications. I'm going to do more trade recaps. I actually have been doing them, but they're not public on the channel. So you guys let me know down below in the comments if that's something that you want to see. And till then, I'll see you guys in the next one. Peace.